In this video, I want to look about the concept of looking at trading in cycles. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this is a concept that I have used a lot in my trading, especially intraday trading. It can be applied to swing trading as well, but I think it's a very good way of looking at the market. So what do I mean by looking at trading in cycles? I mean that, let me use a blue pen here, is that the market will move from different types of conditions. So we'll have, a range expansion where momentum is moving the market. We'll have opportunities where the market is range bound. We'll have times when it just goes very quiet. We'll have times when it's moving to the downside aggressively and shopping aggressively. These are different phases and cycles of the market. Now, we get these intraday, so we get, generally speaking, the open, which is going to be a range expansion. It's finding some value, it's finding some area, lots of buyers and sellers are coming in, they're sort of probing highs, probing lows, maybe trending for the day, maybe not. Then you have the kind of lunchtime chop where things will just be messing around, waiting for the US to open if we're talking about the UK market. And then maybe we'll have an afternoon movement, one way or the other, continuation or reversal. So that's, a very simplified cycles aspect of intraday. Now we also get the same on a daily chart. We get times when there's range expansion and there's look for new value, there's a look for a new kind of level that everyone's perceived is the right price, if you like, for whatever it is. Then we'll get times of congestion, we'll get a bit of backfill where prices will come in. These are all distinct different types of market conditions. Now the reason that we look at these different things in cycles is that we want to use, and if you've watched any of my videos, guys, if you're a subscriber, thank you very much. First thing, if you haven't, hit the subscribe button. But you've seen videos from me before where I've talked about using the right tool for the job. In other words, if you're trading range expansion, the last thing you're doing is going to be looking to fade new highs. Range expansion mode is, as it says, volatility expansion, range expansion is price moving to a new direction, whether it's high or low, and continuing. So you're using a strategy that gets you on board that momentum. That's what you're trying to do. And then look at the other side. If you're looking at a kind of range bound environment, a quiet environment, you're not going to be looking to buy new highs. You're not buying pullbacks. You're in a range bound environment. You're waiting for the extremes to run out of puff, run out of steam, and fade those for a mean reversion back to the middle or the bottom of the range. So it's a different strategy, a different tool. And if you use the right tool in the right conditions, you'll do well. If you use the right tool or the wrong tool, should I say, in the wrong conditions, it's not going to work for you. And I've talked about this many times before. And so if you're looking at trading in the market in cycles, and I know cycles can mean a different thing in trading, I can call it in phases if we like. We can call it, market environment conditions. Conditions is another good one. But if we look at the market does transition, it does this on all time frames. On a daily, an intraday chart, we've got this kind of cycles within 1 day period. We have them during a week period as well. Like Mondays might be more active, Fridays might be quiet, or it might be more active because they had data on Thursdays. We have it over a quarter, have it over a year, we have it over a multi-year, bull runs, big strong bull trends, the quieter bull markets. We have aggressive bear markets. We have a two-way flow in things. We see this with currency pairs quite a lot as well. Big moves in one direction, then they'll break out of a range and they'll just fly off in one direction for multiple months. Then they'll sit in a range for a while they're waiting for something. So the point is, if we can identify the type of conditions that we're in and use this approach of saying, hey, we're trading in different cycles, how do I best capitalize on this cycle? Now, you've got two options. You either say to yourself, you know what, I'm only going to trade range expansion and volatile conditions. My setups are these, and I'm going to only do this. So whenever I get this trading condition or this cycle, I trade. Anything else, I don't get involved in. Or more likely, you say to yourself, hey, you know what, I like to trade these currency pairs and I have strategies for mean reversion. I have strategies for range expansion. So what I will do is I'll be very careful to try and recognize and identify the type of cycle we're in so that I can use the selection of tools and strategies and setups that work best in those market conditions. And it also varies from, market to market as well. We'll have some markets that are in a range bound condition, some markets that are in a real volatile condition. And so, you can move to the place on the pond, if you like, to fishing that suits the fishing gear that you've got, if that's a really bad analogy, but you kind of get the point. So looking at trading in cycles, and also knowing the important thing here is that, markets will never stay in this phase forever. So if you're doing well out of something and swing trading, you're buying dips, you're doing this, recognize that it's important to start to have a plan for what happens when you shift to another kind of market cycle. Do we shift to a range bound condition? What are you going to do for that? How are you going to identify that we're now in a range bound condition? It's not just a kind of pullback on a 3 or 4 day move. What parameters would you like to see to say, we're now under different conditions. I need to step back from that strategy and put that strategy in play, or whatever. And it's the same if you're automating. Guys, if you're running some sort of automated system, I know that these guys, the main thing that these guys are doing, they're saying, hey, this system works very, very well in these conditions. So my main focus is to make sure that we are in these conditions. And these are the variables that I believe identify these conditions. And when this is true, we run the robot, we run the algo, if you like. When it's not true, we pull it out. So thinking of the market in cycles is a really good way, in my opinion and in my experience, of making sure you're aligning yourself with the flow of the move of the market, the ebbs and the flows, the ups and the downs. Because there's nothing more frustrating than trying to force your strategy onto a market that's just not happening. You keep trying to buy breakouts and they're just constantly faking out. It's the wrong conditions, it's the wrong time. You need to step back, reassess, going when it is time for you, or use another strategy. All right, guys, give it a thumbs up if you liked it. Don't forget to subscribe if you haven't already. Good trading, keep risk managed. I will see you in the next video. Take care. Bye-bye.